LVR stands for loan to valuation ratio. The golden rule at the bank is this 80-20 rule, like everything else in life. If you buy a property for $1 million, the bank is happy to lend you 80% of that, being $800,000. The reason for that is it gives them a little bit of buffer in case they have to foreclose and use the rights of their mortgage to sell the property on you and reclaim their money. The 20% is a nice buffer because they assume that the market might have come down by 10%. By the time you don't make your repayments for 3 to 6 months and going through the legal action, you know, that 80% could very well become 100% and the bank might get their money back or they might slightly not. There are legal costs. No bank ever wants to do that to people, which is why they go to so much trouble in the first place to assess your capacity and your character and your history to determine. No bank wants to sell anybody up. It's a last resort. It's a lose-lose for everybody. I was in the bank. I've worked for 4 banks in my time. It was never nice. My boss actually instructed me to issue the warnings to people as a learning experience for me. I was in my 20s and dealing with people in tears. It makes you responsible, and once you start having your own Australian credit license, I certainly go back to those days and see why these rules exist. I kind of went on too far just then. This is about valuations. When you're refinancing your loan, it really comes down to what the banks value it at. So if you've got an $800,000 loan, but the bank goes and values it at $900, well, you're outside the 80% mark and you're going to have to pay very expensive LMI in order to be able to move that property. For medical professionals, accountants, professional sports people, the banks allocate a 90% LVR with no LMI, so the 80-20 rule becomes 90-10 because they're considered just a lower risk and more of a stable income. But one thing about when you come to us and we send a valuer out, well, first of all, there's 2 kinds of valuations. First of all, there's a modelled estimate. So we might throw your address in the system and the computer tells us it's worth $1 million. If the loan's $800, don't bother having the property properly inspected. We agree it's worth $1 million. That's really handy. Sometimes the modelled estimate valuations can actually give us a better result than if we send a valuer to actually walk through the property and prepare a full report. But if it does come to the point where we prepare a full report, a couple of things. These valuers have a hard time. They don't walk in there and say, oh, what's this place worth? They look at the evidence over the last 3 or 4 months of directly comparable properties in that area. So one thing you can do before the valuer comes to your house, if you know that an apartment upstairs or the house down the road just sold for a certain amount and you can see the comparison between that property and your own, have evidence for the valuer. These valuers aren't paid a great deal per valuation, so they spit out 7 or 8 of these things a day. They're in a rush. They haven't got time to spend all day researching every property in the area. So I always say, if you have some evidence of a sale that can help the valuer will say thank you when you give it to him, because that's something he can go back to the office, and once he starts doing his sums, he can rely on that. Another thing is when the valuer comes in, try and tidy up the house a little bit. It's not massively important, but just like when you're selling to a purchaser, it's nice to present the property in a nice way. You're going to get inside the head of the valuer the same way if he walks in and gets a nice feel of the property. So yeah, sure, they're numbers people and they're mathematical and they've got their methods, but like all human beings, when you walk into something and there's a nice breeze coming through and it's warm and sunlight coming through with the shades open, the toilet seat down and the bed made, it does make a difference. One note, most professional valuers won't take a photo of your bedroom. They'll take a photo of the lounge room and the bar. They will take a photo of the bathroom. Only the junior brokers don't know that it's a little bit uncouth to take photos of people's bedroom. Don't see it as an invasion of privacy, right? We look through the valuations, we look through the risks. If the valuers identify that there's power lines next door or there's, a fence line issue or anything else, no one's really going to look too much into your valuation. A lot of people really take it to heart. The other thing is that when we order a valuation from a bank, we can order a valuation from one bank and a valuation from another bank, and they can be $100,000 out. So please don't think that whatever a valuer says, a valuer does not know what your property is worth. You won't know unless you actually put it out to tender or put it to auction. A valuer, it's a guessing game. And like I say, if you can help the valuer in that way, and if it's not going to give you the result you need, we can always order a valuation at another bank. It wasn't long ago, I won't mention which bank, but my assistant and myself both ordered a valuation from the same bank for the same property. property, and there was a big variance, like we didn't know that each other had done that and we got 2. It does show up on the bank system, so we had to rely on the lower of the 2, but it's okay, it got it around the corner. But geez, don't also let it get to your head. Don't think that, a lot of people take it personally. I was moving a $1 million loan for somebody, but instead of the valuation coming in at 2 million, it came in at 1.7, and he was so annoyed that he didn't actually proceed with the loan, blaming the bank and being so emotionally hurt that somebody said he was only worth 1.7. Didn't make any difference at all to the loan application. Like, the LVR was not an issue, but you know, he was so kind of too emotionally involved. You know, when you're dealing with the banks, you're dealing with us, we're looking at getting you the best financial outcome. Don't get too emotional about it. It's a numbers game. We're here to help you build wealth tax effectively, and where we can to provide asset protection, flexibility, and to make you happy. Thanks for watching, guys. That was a lot longer than I wanted it to be, sorry.